Well, Q4 earnings results have just begun, and it's time for BFSI results to be started. It would be HDFC Bank, which would be announcing the results first. Results are expected tomorrow, which is Saturday, 17th of April. In fact, it's likely to be a good profit growth of nearly around 25% for HDFC Bank, but of course the entire management commentary should be especially in terms of the impact of the second COVID waves on growth trends as well as the NPA trends, because do know that just the last quarter management did mention that the disbursements were improving, and in fact in some of the pockets it was reaching pre-COVID levels. Having said that, speaking about the Q4 expectations, expect a profit growth of 25% at 8630 crore. Profits would be led by a healthy NII growth of close to around 14% and an even better operating profit growth of 18%, as control costs should be aiding the operating profitability. Not just that, if you look at the NII growth, that should be a function of both healthy margins. It's expected to be largely stable at 4.1 to 4.2%. In the last quarter itself, management had declared margins of 4.2%. In fact, if you look at the overall loan growth itself, in the recent business update, management did declare that they have seen a loan growth of close to around 14% YOY, and loan growth has been fairly strong in the retail book. The loan growth has been fairly strong, especially in the wholesale book at 21% versus the retail book growing at 8%, and they have been growing the corporate loan book, especially in terms of the top rated corporate book, and hence management commentary, especially in terms of the loan growth trends both in retail as well as the corporate book, and the mix that they intend to have should be fairly important. Provisions are likely to rise on a sequential basis, and quite a few of the analysts are also penciling in higher slippages on a sequential basis, especially in segments like retail as well as the SME, and management commentary here should be fairly important, along with the commentary in terms of how the agriculture sector book and unsecured book is performing. Besides that, if you look at the overall deposit growth, that seemed fairly healthy. They had in the business update, they had stated that deposit growth has grown at 16%, and CASA deposits were at 27% with an improved CASA ratio of 46%. As of Q3, the total recast book stood at 0.5%, and the pro forma NPAs stood at 1.4%, and pro forma net NPAs stood at 0.4%. There is a possibility, or rather we should be watching out for the management commentary in terms of how the entire asset quality should be shaping up. Besides that, of course, if you look at the stock has performed significantly well on a 12-month basis, up 66%. However, in the month of April, it has come down by nearly around 4% and it is flat YTD. It, of course, trades at a significant premium versus the rest of the peers, but it is trading at reasonable valuations at nearly around 3x FY23. According to most of the analysts, and most of the analysts do continue to have a buy on HDFC Bank. So yes, watch out for results tomorrow, Saturday, which is April 17th.